happening, guys? I hope everybody had a fantastic weekend. We've got another Sunday video coming at you, this time for April 3rd and the week ahead. No April Fool's jokes. We're a couple days past that, but I hope everybody, if you did prank somebody, I hope it worked out well. First and foremost, IU. Free month of IU to Slacker T9X, as well as a couple t-shirts. Those are going to 12496K. And remainder Samra 7154. I've also posted them in the scan. So if I butchered the name, just go and check the scan to make sure that it is you. As you guys know, all you have to do is leave a comment. Key takeaway. What was it that was an aha moment for you this week? And that's all you got to do. And like I said, this helps other people. Other people might be reading the comments and go back and say, I missed that. Let me go back and reread it. So that's the goal here. And because of that, I reward you guys with, as you guys know, IU free months, free t-shirts, scans, icon meals, you name it, lots of free stuff. So, should be a short scan. I did get a lot of positive feedback with sort of the way that I did it last week and the week before, where I'm spending a little bit more time diving into different key topics and things that you can pretty much apply the next week from more of a technical perspective and just sort of, going through it on the charts. And most of the time it's just me talking about situations and sort of how to think and how to prepare and the best way to go about the current market. But sometimes it's nice to see, the screen record and things like that. So I'll do that a little bit this week, and then we'll get right into scan. Once again, I'm going to do the video of my screen instead of both because I actually cracked my laptop, so my camera is no longer working on that one, which I usually use for the second part. So video topics for today. First and foremost, I put out a video on, I think it was Friday. Do you need a day trading broker? For some of you, the answer is no. Right? If you're only making 1 or 2 trades a week or a month, then it probably doesn't make a difference. If you only go long, probably doesn't make a difference. But if you're an active trader, if you are pushing the buttons quite a bit, if you need faster execution, more borrow availability, the right support, becoming an actual person rather than just a number, an account number, then watch that video. There'll be a link to it in scan. But I hope you enjoyed it. And as you guys know, we had the deal of a lifetime, which you can click the link and check. Lots of breakout longs in this market. And, one of my strong suits is anticipating range, knowing, it's not always going to be right at all, but, and also I'm not going to trade it perfectly either. But knowing what potentially could happen if X, Y, and Z happens, right? Like if a particular stock traps and then it starts to break out, what is the potential that it could go based on sort of how it's setting up? And that's something that I'm typically pretty good at. And so this week, we obviously had AI. AI was a long idea as it started to sort of break out. On, I think it was Wednesday I had posted it, maybe Thursday, but thinking that 30 to 35 parabolic move was coming. And I actually thought probably next week was going to be the week that we, probably started to speed up, because a lot of times I start to get relatively confident on that Thursday and Friday, and then I sort of second guess, and it never happens on my timetable. And then I plan forward to the week after, and the trade happens. But I ended up exhausting myself the week ahead, so I end up missing the trade, right? So anyway, wheelhouse. Then we had PYXS the day before. This was a swing trade, big picture idea that I had posted not only in the room but on Twitter, and I figured that it could have range of 5 to 7. I think it hit 694 or something. It was 6 cents off or so, 6 to 8 cents off from $7. Again, an anticipation of range. But there was a lot of similarities between PYXS PALI and AI. And PALI was the other one that you guys saw on the Thursday Gapper. Uh, and the three things, or the one thing that all three of these had in common was they should have died. They should have pulled back. They should have broken down, and they didn't. Right? So most of us, including myself, many times, it doesn't make sense. It should have broke down. I can't trust it. Right? How's it still up? But those words should trigger something to say, hey, maybe I'm thinking incorrectly here. Maybe if it starts to go the other way, it's probably going to go even faster. And that's what we had on all three of these, right? Everybody is on sort of the same, wavelength, same mindset where they're thinking that should have happened, but instead, why is happening? And so being able to identify that early on, either you avoid the trade or you get long, right, in this situation. So you don't always have to get long. You're not always going to nail it. And a lot of times you're going to fumble the trade overall. But the key is not to be short, not to be fighting it when you know that it shouldn't be here. It shouldn't have held that level. And it's oddly holding really, really well, right? And so we've been seeing that time and time again into 10 or 11 a.m. when it should have made new lows, but instead it holds on. So we've discussed that many times where those are the types that typically grind back into the close. So the ones that you need to be cautious of are those slow and steady grinders, right? The edge comes when it gets everybody out. Parabolic move, exhaustion move, blows everybody out, and then it resets, right? And then the trade comes, usually fades off. The didn't die, slowly grinds, didn't die, slowly grinds, didn't die. That can last a long time. And the slower that it goes without that parabolic move, the longer it can last, right? So that is the thought process behind, the PYXS idea this week that you guys saw, the PALI idea, PALI idea that you guys saw, and as well as the AI idea that you guys saw. So being able to recognize those traps, again, it's not always about, all right, I nailed the long. It's about not getting caught up in the short, not getting bent, not stepping in front of a move that did check those boxes and made you think, why is this still up? Why is it still holding? And a lot of people don't take those warning signs and make adjustments. And that's really the difference between getting squeezed out and chopped up and all that kind of stuff. So that said, one of the points that I wanted to make was on AI, for example, right? Sure, perfect call goes to, almost 35. Am I sized up on the long side? Am I, jumping for joy? No. I screwed it up. I had a good portion long. I sold it out. I scalped it long. And then I tried to short it 2 or 3 times, which I had good entries, but it was the same situation as AMD, right? You have this great entry, flushes, and then it's back up. Great entry, flushes, and it's back up. So after 2 or 3 times where, it's not holding like a failed follow through setup, that for me is a trigger like, hey, what are you doing? Just you're wasting time. You should let the trade work for you, not the other way around. Right now, I'm working for the trade. I'm trying to figure it out. So you just draw a line and you wait. You wait for it to breach. And a lot of times you will see that that line does not breach. And so AI, I'll jump into it. But I was going through it in the lounge on Friday where it started to really ramp up, and it did the same thing over a dozen times, the same trap over and over again. And the simplest thing that you can make if you get caught and chopped up on these is don't fall for one candle. And that's what everybody does, because you get this nice squeeze out and then bam, slams down, right? And you're like, all right, it's over. Here's the trade. Well, guess what? What if they soak it right there? Right? You're already in. So now they've got all these shorts that are ready for the unwind, but really it was just one profit-taking candle. You can't get confident. You can't get conviction off of one candle. Because in this market, that one candle and that one flush is just a trap for the next move higher. Last couple of things. Sneaky bull market, I wrote. And, like I said, if I was betting on this market, I would have bet money that it wouldn't be here. Right. And I would have bet money that we would be heavier than we are. And we literally just had a financial crisis, or what seemed to be one, a couple weeks ago. And here we are pushing highs. And tech is up 70, 80, 90%. NVIDIA is, I think, up 90, 92% on the year. Right. Very sneaky bull market underneath. And it doesn't feel that way. The media doesn't portray it that way. I feel like everybody's talking about how bad everything is, but yet here we are. They just keep on going up. So the key is that you can perform in any market as long as you're perma unbiased, right? You're perma, for opportunity. And that's really all that matters. When you come in and you force your bias, like, this does not make sense, this has to pull back, there's so much bad, then you're lessening your opportunities. You're taking away, all these different trades that are actually working in this tape. And at the end of the day, it's about kind of joining the trend. And as you saw this week, I got long quite a bit. The PYXS swing trade idea, the PALI swing trade idea, the AI swing trade idea. Those are all long-sided, and I've got to adjust, and I did in this market. So think about that. And then the last comments that I would have is two things. One, it's been a while for, at least for me. Like, February was fantastic. January was kind of just slow, steady grind. Hard to get really solid conviction, because the ones that were the best setups, to me, were sort of choppy and low liquidity when I wanted to trade, or they either gapped up, gapped down, and kind of ruined that opportunity, and you had to swing to get it. So they're far and few between on the high conviction types of trades. But this week we finally had one on VHC. VHC was up on a dollar dividend, and then that was sort of like a vague PR, and then we found out what was under the hood, and not much. Now they're no longer going for that Apple type. I think it took the 500 million off the table or something like that. So anyway, it ended up unwinding, and very, very high conviction, very, very liquid, where I could finally go ahead and scale up to something that I was comfortable with. Whereas in this current market, I'm kind of risk adverse on a lot of these small caps. I'd rather just take a little bit here and there and wait for a big trade setup to come. And I think that's done me wonders. Yeah, sure, I missed some big opportunities, but the ones that turn into headaches, I'm not getting that headache. I'm not getting trapped up in the stuff that everybody's trying to force, because all they know how to trade is small caps, right? So last but not least, getting prepared. GRRR. Perfect preparation all week. And I'll show you, I did tweet it, but getting prepared, understanding that it's a Chinese liquidation play, understanding that they've done F1As for days, right? I think there was 4 amendments. So we know that it is very, 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 very close. But that does not mean that it's time, right? Because a lot of times people anticipate offerings, and either they withdraw them or they do some sort of funny business right before. And in this case, it was the same. There was F1As, and then they just gapped it up, and they started to promote it at 12. So we knew it was just a matter of time. And like I said, as soon as that effect comes, it's game on. And so we got that nice. I shorted it at 10 and 9 and 8 and 5s, and it just worked out really, really well. So I wanted to review that, or at least showcase that, because it just goes to show, if you're focused and you wait for these trades to come to you, that one trade can make your week, your month, whatever it is. And you don't always have to keep on pushing and pushing and pushing and pushing. It's like that 80-20 rule. 80% of your profits probably come from 20% of your trades, or it could be, 90% and 10%, whatever the case may be. But if you look at where you make your money, if you look at what you excel at and you focus on that, you're going to be able to do a lot less for a lot more. So just think about that. And I would say, like I said, it's a sneaky bull market, but the only real problem that I'm having right now is just there's so much opportunity, right? And so if there's all of this going on and you focus here, these are the ones that you're best at. You just got to be comfortable with it. And yeah, sometimes you're going to pick this one and it's the wrong one, and it doesn't mean that it goes opposite. It just maybe it's not what you thought. Maybe it only faded 30 cents and you were hoping it was going to fade $3. And then there's all these other ones that you skipped that were just complete layups. That's going to happen all the time. It happens to me all the time. It's just part of trading. So it's very easy to get frustrated when that happens. It's very easy to start forcing and pushing buttons and chasing names because you feel like you missed a big opportunity. So just keep that in mind, that no matter what, it's always going to seem simpler on the ones that you didn't take, right? Just like when you take a day off and you come back and you look at the market and you're like, oh, I would have nailed that thing. And really, would you have? Because if you were there, sometimes you do the whole chop thing, you get out and you miss the opportunity, or you cover too soon. So it's always easier after the fact. So don't beat yourself up. But that's it. Let's get into scan for the week ahead. Hopefully this week I turn the corner. I've been sick as a dog for the last 2 weeks. I don't know. I think it's COVID that changed how my body reacts. But literally every time my daughter comes home from school and she has something, I catch it, which literally never happened prior to COVID. I have not been sick in 20 years. And, now I just get sick all the time. All right, guys. So for the second part of Scan, as always, I'm not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. If you're not okay with that, shut the video off. If you're good with that, you want to understand what high probability setups look like, what edge looks like, and what the market is currently rewarding, then you're in the right spots, or in the right spot. I said I was going to tackle this before I get into anything else, but AI is a perfect example of one of those where people just get run over. And it's quite simple as to why they get run over. Because each time it flushes, they hammer in, only to see that it reclaims and heads higher. We talk about swipe risk, and that's exactly what this is, right? You don't know if that pressure is shorts or if it's sellers coming to the table. And in this case, obviously, it's not sellers coming to the table. It's shorts hammering in, swipes back. Shorts hammering in, swipes back, right? And each time it's a new high. So the key, and what I went over on Friday in the room, I had a chart, and I posted each of the levels that each time it came back down and tested where it based, and that became the new level. And if you notice, if you just go back and just even draw under any of these levels that it comes back and tests, never once does it breach that level again, right? And if you just draw this line each time, it would avoid you from getting positioned in there. So there is opportunity when it starts to parabolic and there is a exhaustion move. And I did try that 2, maybe 3 times. I think it was twice, but I think it could have been 3. But typically 2 or 3 times is my cue. Hey, if it's not staying heavy and you've tried it 2 or 3 times, regardless if you make money or not, it could be like an AMD situation where, I start in, flush, nail it, do it again, nail it, but I'm holding a small core because I have this bias that it's going to break down. You're pushing a lot of buttons for nothing, right? Doesn't necessarily mean you made money, doesn't mean you lost money. It's just, is it smart? Are you working for the trade, or is the trade working for you, right? And my goal always is to let the trade work for me. If I am continually pushing buttons and I'm not getting anywhere, whether I'm getting chopped up for 30 cents, 50 cents, I'm making 30 cents, 50 cents, that's not what I'm looking for. I'm looking to get on the trade, the right side of the trade, and just let it work. And after 2 or 3 times, that to me, again, is the cue. Say, hey, hands off. What are you doing? And so the same situation happened with AI as something like AMD. So as soon as I noticed that, I go into, hey, remember AMD, take a look at this, draw your lines, wait, be patient. And every time it cracks hard, you see me in the room. Hands off, relax, because you don't know what the next candle is. And a lot of times you'll see they just soak it right back up. And it's going to keep you out of trouble. So think about that on Monday, the week ahead, on all these types of trades. Just like PALI. PALI did the same deal where we knew that 310s and 320s were the soak spots. We talked about it in depth in the room over here, 310s, and we talked about the 320s. And I can hardly see, but I'm going to guess that that's about right. Yeah, nailed it. Almost. But what do you know from looking left? To assume, to be aware on the right side of the chart. And so that's exactly what we had here on PALI, same sort of situation. You can have all of these flushes, but if it doesn't break the overall trend, you're getting shorts on the wrong side of the trade. And it should have died, but it didn't. And it's no different than the PYXS idea for the swing trade. Now, that obviously came in hard on Friday, but before that, every time it came down, just look at all the bases. And if you draw a line under that first low, if it doesn't breach it again, where's your edge? There isn't one. So that's the simple way to see it. And hopefully that helps you guys. I'm not going to stay on it too long. I will go through it again on broadcast in the morning at 8:50 a.m. For those of you guys that are in the room, if you have any questions, you can go ahead and post them in the lounge in the morning. With that said, AI, ideally, there's two scenarios here that I would trade it. One is a weak open. Maybe it gaps down 50 cents, 80 cents, flushes to $1, $1.20 down. Starts to firm up and then rallies back and goes 35, 37, something like that. This could easily do 40, 45. This has been setting up for a long time. AI is like this new, everybody wants a piece of it. There's number one, they have the best symbol, right? Because everybody wants to invest in AI, and AI is a cool thing right now, and everybody's talking about it, just like back with GameStop and all that, right? So when you have a symbol that is AI, that's like the go-to. Nobody's going to invest in SOUN and BBAI. Why not just invest in AI? So they have that going for them. But at the same time, it's very new, and everybody knows that they need to be part of this AI thing, right? Everybody wants to have a piece. Everybody wants the next meme name. And so that's what this has got going for it, which you need to be aware of. Because, yeah, sure, maybe it shouldn't be here, and maybe it makes no sense, but it doesn't matter because the momentum's here, and it can last a lot longer than you think. So ideally, week open, red and red to green. Otherwise, if it gaps up 35, 36, 37, blows out, I'm going to look for it to fade back to flat. Not looking really for an unwind, just something to take advantage of. If I was looking for a patience trade, then I definitely would take it as long as it stays heavy under VWAP, as long as it's after 9:45 or 10 a.m. But those are the two ways that I would trade it. Be cautious. You never know if they just blew everybody out over 30s on Friday and then we come back in, or if this is the start of a new move. And if it is, then those are the two situations that I would trade it. Then we had PALI. PALI was an interesting one. This was a fantastic long idea. For the gapper, we had a huge breakout to 370s after hours. I sold it all, 320s, 350s, 370s. Pretty much went back there in the morning almost. Flushed out, gave a great opportunity, great stuff move, great flush. Identified 320s, 310s as sort of the soak spot. And from that point forward, it did offer some huge unwinds, but overall, it held trend. So this is another situation where it should have died. There's probably a lot of shorts on the wrong side. So I'd either be looking for, just to fail off the open because it squeezed everybody out on Friday, meaning it wasn't making new lows by 10 or 11 a.m. So into close, all the cover came in. Or if it has a weak open and it retests back towards, say, VWAP, and then starts to ramp back red to green, then we have an opportunity for a big squeeze. So those are the two situations that I would trade on something like PALI. But again, you don't want to have too much conviction, because as you saw with PYXS, if you think that it has to bounce, guess what? That thing went from 6 to 5 to 4 down into the threes before it bounced back up to about 450 or 470, something like that. Then we got ENVX. ENVX was a great trade. I faded it on Friday. There was a nice failed follow through setup. This should look pretty familiar to most of you. If this is not good for you, then you had a lower high and failed follow through momentum setup right here as well. So ideally on Monday, I'd be looking for some sort of blow off back to that level, or at least versus that level as my risk. So that's what would interest me on that one. KHR, nice unwinder. I faded this one, just small off the open. Just turned into a small trade. It ended up rallying back. I never went back. However, I'd be watching this one potentially for a push back up towards either if this prior support level becomes resistance, or ideally, maybe it gets some better action and comes into this wheelhouse. So that looks like 3150s, 3230s or so, somewhere in there. Look left, looking to see it exhaust out into that level and then fail to follow through. XPEV. XPEV's sort of that daily driver I talk about. So if there's nothing that's super, super interesting, I would probably look at something like XPEV or NEO, just like I look at Baba, or not Baba, excuse me, Riot and Mara every day, just for potential. So there's good volume, good action, and it's been on a pretty decent run. So if it does have that day where it's going to flush people out, I want to be there for it. Move in, move out, move on. Don't marry it, otherwise you're going to get chopped up. GFAI. This one is another AI name, so I'm watching that one. It did have a nice big ramp after hours. And so what I'd be looking for is some sort of failed follow through. If it wants to ramp up and retest towards these highs, somewhere around here, I would say this is the support before it cracked. So ideally, that's 950s range. But I'd be watching for some sort of parabolic move. Watch it with AI. Right? If AI just comes in, then this thing's going to unwind really, really nicely. This was a recent reverse split, so it's nice to see, but just be cautious getting too high conviction. I would use AI as that index that we talk about, as sort of a goal to use, a tool to use for SOUN, BBAI, GFAI, and all the rest. Next up is GRR. GRR was a really nice unwinder, very good preparation, and ended up being a pretty good trade for me. I'd love to see any good morning shoves, and then I'm thinking this thing heads towards twos. YMAB, higher the better, using VWAP as sort of a level. I don't want to think that this has to pull back, but I'd like to be there if it does. So I don't want to appear like I'm bearish and I'm only short biased. If this starts to firm up, I'm happy to go long. But in this case, morning shove fails versus Friday's VWAP, I'd be looking for some sort of fail. Same deal, BANL, lower volume. Same deal with NAAS. NAAS was fantastic, nice unwinder, and then started to come back. There's great trades there, but if you marry them, you're going to end up getting chopped back up. Next section is continuation. We've got POAI. This one had a ramp up late day. It came on my radar as soon as it ripped up. It hit the high day list, and then I realized it was an AI name, so I went ahead and took a few. So I have some of that over. EZGO has been a nice one. No position, but nice breakout. Dip and rip candle. Continued breakout. Just keeping an eye on it. LOCL, same deal. Nice gap up day. Came back in. Then a dip and a rip. Came back hard. So I'd be watching all dips until we have some sort of blow off move. Nice breakout setting up right there. Same deal with AIXI. I have a position on this one. I had sold some of it on Friday, but this was a big picture idea that I had put in the room and looking for some sort of continuation on that one. So I'll give it a couple days if it as long as it doesn't pull back 30 cents and then stay heavy and continue on. That's probably where I would stop. But at any rate, letting that trade work. And I think that's it. Yeah, so that's it. Be cautious. It's the one thing about this market is every morning, usually I like to come and I've got this plan and these A+ setups and this and that, and it's just not that type of market. And sometimes it feels like you're not prepared. Sometimes it feels like you haven't done enough. But then come 9:45, 10 a.m., you've got countless trades, and that's really what it's about. So, kind of knowing what days to, go for it right off the open compared to the days that you shouldn't is the days that you have your blinders on and you end up missing everything compared to the days that you just wait 15, 20 minutes and then you've got countless trades, right? So don't feel like you're not prepared. I went through some and there's some trades that might be okay, but there's also a good chance that I'm going to change a lot of what I'm watching by Monday morning. And that's just the market that we're in. It's not always going to be the case, but we are coming into this potential peak euphoria where we start to really squeeze out. We've got Tesla going back up. I always use that as sort of a guide for the euphoria in the markets. We've got SPY going crazy. So, was that all just a squeeze out, or are we, still going to rip this week? We'll find out. So keep that in mind. Keep that in mind that as good as this market is right now, it could change in a snap of your fingers. So just be aware of that. I'm not bullish. I mean, I'm not bearish. I'm not crazy bullish either. I'm unbiased, but just have your guard up when the market does shift. All these nice swing trades that we've had, all these nice long trades that we've had might not be as, easy. And I put easy in quotes because trading is not easy, just in case you forgot. All right, we'll see you guys in the room on Monday.